Good morning, everyone. Happy Hump Day. Happy Wednesday. As always, we're going to wait just another minute or so, and then we'll get started here. Good morning. If you guys have questions along the way, of course, please let us know. We're here to answer them. There we go. All right. How are we doing here? Perfect. Yeah, we're just a couple of minutes past the top of the hour, so I think we can get started. Excellent. Good. All right. Good morning, everybody, and happy Hump Day. It's Wednesday, the 14th of May. I hope everyone is doing well here on this morning. We are entering the froth zone when it comes to the equity markets. Once again, here we'll cover that here on our notepad. I want to spend a little bit of time as well, once again, on gold and silver. And I do want to take a look at two stocks that act very much the same, and that is Palantir and Roblox. For those of you guys that are in sort of the game of some higher octane stocks. So before we get started, quickly, for all of you guys that might be new, thank you all for being here. I'm Serge Berger from thestudytrader.com. This is our morning call, and what we do is we spend the next 10 to 15 minutes going over the top few things on my notepad. And again, if you guys have any questions, by all means, please let us know. The big difference between what we are seeing right now in terms of the environment and what we've seen in the past with these V-shaped reversals is that we've entered a different era, and we still live in very much sort of a gambling bubble, but that does not mean that we need to just be bearish all the time. What has changed, though, is the bigger picture, and I think an easy way to explain that to everyone is by looking at the chart here of the U.S. indices. You see there in sort of the middle part of the screen, the bottom three lines, which all have a beta of about 1 together. The S&P, the NASDAQ, the semiconductor stocks, they're basically flat on the year. The German DAX up 28% for the year. So we're seeing a lot of international stocks essentially, eating the lunch of U.S. equities, and we don't think that's over. We think that's a much longer theme that will play out, and that's why we remain of the view that is unchanged, that we are going to see underperformance for the S&P 500 over the next sort of 5 to 10 years, meaning sort of low to single-digit returns on average, right? So that means there'll be years where the returns are negative and years where the returns are better than that, right? So you have to kind of average that out. And that's kind of the number one thing to keep in mind as far as we're concerned, the bigger picture. But what we're continuing to see is if you look at the momentum in the market, and this is where our trender indicator, of course, comes in very handy. Some of the higher octane stocks like the Robin Hoods of the world, and some of the Coinbases that are added to the S&P yesterday. There's a lot of momentum, and so there's a lot of momentum trades we can do in this kind of a market, long and short, and being open-minded. As we continue to say, this is a trading year, or the year of the trader, and again, we think we're going to have trading years now for a number of years. where the stocks that are higher octane, have big rallies and then big drop-offs. And before we start looking at Palantir and Roblox, we could look at Robinhood, we look at Coinbase. It's all the same type of stock. They are retail trader favorite stocks. And, there is a lot more risk in those stocks that people believe. But as long as the gambling bubble keeps bubbling, it doesn't make a whole lot of sense to not, play those stocks because they're trading stocks, right? And so that's kind of where we are in that. As far as the S&P 500 is concerned, maybe before we get to those other two stocks, I posted a chart this morning in Trade Ops, which is our members area. So if you guys go into the Trade Ops, and particularly if you go into the Buzz and Banter, that's where I posted that chart this morning, just to keep you guys updated as I promised I would here in the morning call. We are now in what I think is the froth zone. And so, I had this discussion this morning. I had it last night. I had it this morning with a couple of sort of funds I work with. I had it internally as well. It's one thing putting on a trade, but I think getting bullish here is more or less the opposite of what from a trading perspective we want to do. And so, whether the S&P can go, another couple percent higher and go to 600, to me is not really worth the risk personally, unless it's literally just a day trade, because you have to think about it from a reward to risk perspective. And so that's why we track trends and we track when things get extremely overbought and oversold. And so maybe the best way to explain that is using our vertical X Pro indicator, which, by the way, if you guys don't know what that is, we're doing a special session this week. Maybe reach out to our team to make sure you can sign up for that. But if we're getting bullish on equities after a 20% rally off the lows, that's just bad form, right? Now, it doesn't mean that the S&P can't squeeze another percentage or two higher. It's entirely possible, but it's kind of missing the point. There's some people I know that, very few, by the way, that de-risked down there. Most of the funds and stuff that I work with, they de-risked at some point in early March when our market rover told us the trends were breaking. Retail investors didn't get bullish down there. They held on for things because retail investors don't do risk management. And they once again seem to be proven right. They're not, but they think that at least. And so the retail investor is now likely to get more bullish up here. But I can tell you from calls I had even just again this morning with a couple of hedge funds that this is not the point where they're getting bullish. They were taking advantage of extreme oversold signals around there, right? And they're now actually looking to get net shorting. In fact, they've been leaning net short, and I mentioned this I think last week. About a week and a half ago, we then saw some taking down those positions into last weekend, myself including, because we were all unsure, obviously, what would happen with those talks with China over there in Geneva, and then of course this week's Trump trip in the Middle East, has the room for a lot of positive news, as we saw yesterday, right? But I think once we're past this, and there's also the potential, and this is not my words, I have no insight there, maybe there's some further progress or some progress with the Ukraine-Russia situation tomorrow in Turkey. I don't know, just what I'm reading. But I think that's why people are, the ones that the big algos are reluctant here to kind of go the opposite. So they're kind of waiting for a headline. But the market remains in a situation where, if you think that tariffs are no longer a thing, there's going to be some tariffs, at least, 10% or something, which still is a big burden for a lot of companies. So the algos have taken over the sort of the news flow, and a lot of it started when retail basically started buying, more of the Palantir names, and then the algos got the sniff of that, and then they kind of topple each other. So that's as far as the broader market's concerned, but I do think that we are in the froth zone. Again, if you need this chart, it's over in the Trade Ops members area. Again, does not mean we can't squeeze a little bit higher. That's entirely possible. But again, you need to ask yourself, if you're now getting bullish up here, it would have been nice to get bullish down there, right? It's a 20% rally, so it looks a bit stupid to get bullish up here. The reward to risk is just much worse now from a trading perspective. So that's that. But, and again, this is the reason why this is a trading year. We do need to understand that there are opportunities still, and I'm going to show you one of them that we are looking at right now. And I mentioned this stock last week and the week prior as we came into earnings and so on and so forth, and some news around the stock, and that is Palantir, right? And so, this is one of those names where the animal spirits could propel this one higher from a trading perspective. And if you want to be technical about this, then you can draw some lines. You can draw some more lines and call it a cup and handle pattern. You can probably, find some doodling pens from your children or your grandchildren and get very creative and turn this into a complete kindergarten drawing. But I'm trying to find the damn tool here. But at the end of the day, what we're seeing here is a stock that, if you really think about it, is essentially holding up extremely well, right? And no matter what the earnings scare was, it wasn't much of an earnings scare, but we're now breaking out. The stock yesterday was up 8%, right? Could this stock make it to, 150? Of course, that's just another 20% from here. For this stock, it can do this in a couple of days. I'll tell you, the stock can tomorrow morning also be at $100, which is why I want to be, sizing trades smaller right now when it comes to these kind of names. I always do, because they're more volatile names, right? This stock still has about a 60 vol. So that kind of speaks to how volatile the names are. But, if anyone is looking to put on a trade, again, I would always advocate small size for this kind of thing. This is the kind of name that I know the algos are probably liking here. And in fact, I'm going to quickly show you guys what this looks like on our momentum indicator, the trender. We actually received a buy signal. We got it before earnings, and I don't hold swing trades through earnings, but we ended up holding our trailing stop, which is the purple line. That's very bullish. And now the stock's actually breaking above to where it was before earnings. So there's a lot of things here from it, and I'm saying this is a trading position right now, or idea. It's not. I don't have a position on, but I'm considering putting one on here, maybe today. So this is the kind of stuff that I'm looking for here right now, and it's very similar to, again, whether it's Coinbase or Robinhood or this one here, Roblox. These are the kind of names that are all acting the same for the most part. And again, you can see it's the same people, it's the same algos, it's the same things that are chasing this. Again, you can call it cup and handle, you can do whatever you want, right? And so that's kind of what we like here. I just want to bring up one more point that I mentioned yesterday, and then I want to have a quick look at gold, which is getting a bit of a move lower today. But we did yesterday mention, let's not lose sight of the yields. 10-year bond yields, 10-year note yields, I should say, are back at 5.5% this morning. The 30-year and the long end of the curve has held very steady. The 30-year, to me, looks like it wants to break above 5%. And I think that is going to be something that if that happens, that is not going to be something the equity market's going to like too much. Last thing, just quickly on the S&P 500, I do think we need to keep a very close eye out for the gap from Monday morning, so the May 12th up gap. If and when we fill that one, and how we fill it, and how the momentum looks like, will be very telling. So if we kind of gap below it, if we were to get some negative news, that could be very, very bearish, and this would have been a big breakout, a sort of rally fake. And again, I don't know. We're open-minded here. I think I think making all-time highs here, lasting all-time highs, is very difficult to imagine, particularly through a multi-year lens, right? We're in a wide trading range, which is how I opened up here 15 minutes ago. But at this point, I would want to watch the bond market very closely, and the 30-year, seemingly wanting to break above 5%, and the 10-year above 4.5 is something we need to watch. Last point, real quick. If there's any questions, please let us know. But gold is making another move this morning. In fact, let me quickly show you guys this on gold spot. Gold this morning at just about 3,180 or so has now broken below the lows from the other week. So we'll see what brings that. I remain net short gold, just in full disclosure, since this is a position that I've, publicly been talking about for the past couple of weeks. It's my largest long position. So I've personally been long gold, remain long gold. I haven't sold a single penny of it since the summer of 2023, I believe it was. But I'm hedged, right? I'm actually overhedged, meaning I'm short gold futures versus my core long gold holding. I do think that gold could ultimately go towards 3,000. Maybe it goes lower, but this is something I'm watching very closely as well. And then silver, just to quickly bring this up again, it's a bit of a pain in the ass. In fact, it's very much a pain in the ass, silver, but it's acting a whole lot better than gold. And if we were to see some better economic data at some point, silver will probably fly above 35 on the way to the high 30s, I would imagine. But I just don't think we're there yet. I keep talking about that silver to gold ratio. This is not the best way to show it, but the gold to silver ratio is actually extremely extended, so it's quite likely that we're going to start to see it catch up. Last but not least, silver catch up. Last but not least, this is Bitcoin versus the price of gold, and the price of Bitcoin here looks like it wants to continue to break higher. I think, whatever it takes to get it above 107, 108 would probably get it to, the 110, 115, 120, 100, thousands area pretty quickly, and then the price of gold is now converging. So I've been showing this chart almost every morning here in the morning call for the past 3 weeks, the past month probably, saying that the price of gold versus the price of Bitcoin looks to be overextended, and that gold might come down, Bitcoin might go up, and that's exactly what's been happening. So we'll see if this continues. That's all I have this morning. It's actually a lot, I should say, for this morning. So hopefully this was helpful. We'll see you guys back here tomorrow morning, Thursday. Tomorrow is going to be the 15th of May. Looking forward to seeing you guys here tomorrow. And if you are a member, we're going to see you over in Trade Ops in our members area in about 10 minutes, and we'll start the trading day. Please give us a thumbs up, like. Please subscribe to the channel. Share it with everyone you can so we can continue to do this. If you subscribe to the channel, obviously it's free, but it allows you to be alerted in real time when we go live, when we have podcasts, analysis, all that stuff here. So thanks for being here. Have a great